We'll be backtesting and demonstrating this new 5-minute scalping strategy, which has a 99% win rate today. In order to make the strategy even more profitable when trading, I will also be demonstrating and backtesting an improved variation. The method works with stocks, forex, and cryptocurrencies. Let's get started now that we have cleared that up. Let's start by setting the chart's period to 5 minutes. Go to the indicator search option after that and look for the RSI indicator. Choose the TradingView created RSI indicator and add it to the screen. We'll then need to adjust the indicator parameters. Navigate to the Style option under the Indicator Settings tab. We must now take away the RSI's upper and lower rings. The RSI backdrop fill needs to be taken out as well. To make the RSI simpler to see, we must then alter its color and thickness. We'll need to switch the RSI moving average from a line to rings once you've completed that. The middle band's hue will finally be changed to improve visibility. We only needed to make this modification to the RSI signals. Let's now update the chart with the additional signs. Find the standard stochastic indicator by selecting the indicator search option. Choose the TradingView indicator, then add it to the screen. Additionally, we'll be altering this indicator's options. Go to the settings page for the stochastic indicator. Change the K-smoothing to 3 by clicking the Inputs option now. Let's now include another sign in the chart. Find the MACD indicator by going to the indicator search page. Choose the TradingView indicator, then add it to the screen. The parameters for the MACD indicator will also need to be changed. Click on the Style options under the Settings tab. We'll disable the MACD graph. Let's now examine the best time to open a purchase position. The stochastic gauge had to have first been oversold. Make sure that both of the stochastic lines have passed below the lower band to verify this. We must examine the RSI indicator and wait for the RSI line to breach above the middle RSI band after the stochastic becomes oversold. Thirdly, the MACD indicator must issue a bullish indication for us. Every time the blue MACD line passes above the orange signal line, this is the situation. Finally, we must ensure that the RSI and MACD criteria were satisfied before the stochastic reaches an overbought state. This is due to the fact that the signal will no longer be accurate if the stochastic does become overbought, and we will need to look for a new signal. But as you can see, every requirement was satisfied before the stochastic reached overbought, so we'll take a purchase position in this instance. The most recent swing bottom will serve as our stop-loss point. We plan to aim for a risk-to-reward ratio of 1.5 times for the take profit. Let's now examine the outcome of the transaction. As you can see, the transaction was very successful. Let's now examine the best time to initiate a sell position. The stochastic needs to be elevated first. By examining the two stochastic lines and confirming that they crossed above the top band, we can confirm that this is the case. We must examine the RSI line after confirming that this is the situation. The RSI line must have crossed below the 50 mark before we can proceed. This demonstrates that the RSI signals the beginning of a bearish pattern in the market. Thirdly, we require a bearish crossing of the MACD lines. Every time the blue MACD line descends below the orange warning line, this is the situation. Last but not least, we must ensure that the RSI and MACD signs are given before the stochastic goes into oversold territory. As you can see, every requirement has been satisfied, so we will take a sell stake. The most recent swing high will serve as the limit loss point. We will aim for a risk-to-reward ratio of 1.5 times for the take profit. Let's now examine the outcome of the transaction. As you can see, the transaction was extremely successful. Let's now examine how we will be enhancing the plan. We will need to add an additional indicator to the chart in order to improve the win rate of the strategy. By the way, TradingView doesn't consider this additional indicator to be a distinct indicator, so you can use all 4 indicators even with a free account. Go to the indicator search option now, and look for the volume indicator there. Choose the TradingView indicator, then add it to the screen. Click on the settings icon after adding the indicator to the chart and then select the style page. Now switch on the volume indicator's moving average. Finally, we need to alter the moving average length from 20 to 30 by clicking the Inputs tab. We only needed to make that adjustment. Let's now look at the indicator's intended use. We wouldn't be able to exclude ranging markets because we didn't really have a reliable volume indicator. Additionally, we wouldn't be able to determine how much market volume is presently bullish or bearish. Overall, I think it's a fantastic idea to add this indicator to the chart. Now that we have added this indicator to the chart, let's look at when to initiate a position. Let's start by discussing when to open a purchase position. The stochastic gauge was oversold, as you can see. We can see that both of the stochastic lines cross below the bottom band, so this is how we know it. We must glance at the RSI indicator once the stochastic has oversold. The RSI line must break above the center RSI band in order for us to succeed. Thirdly, the MACD indicator must issue a bullish indication for us. Every time the MACD line crosses over the orange signal line, a bullish indication is generated. After that, we must ensure that the RSI and MACD criteria were satisfied before the stochastic enters an overbought state. Finally, we need to examine the volume gauge. We must confirm that the number was positive and higher than the blue moving average. This was the situation, as you can see here. So, we'll take a buy stake. Our stop loss will be placed at the most recent swing bottom, and our take profit goal is a risk-to-reward ratio of 1.5. Let's now examine how the transaction unfolds. For a sell position, the reverse is true. The stochastic gauge was overbought, as you can see. Here, we can also see that the RSI and MACD indicators both fulfilled the requirements prior to the stochastic indicator going into oversold territory. The volume bar is crimson and above the blue line, as we can see last. This demonstrates that there is sufficient demand to drive the price lower. So let's start a sell position with a stop loss placed at the most recent move high. We will aim for a risk-to-reward ratio of 1.5 times for the take profit. Let's now watch to see how the deal turns out. As you can see, the transaction was extremely successful. Okay, so now that you know the trading setup, let's actually do our backtest on a 5-minute time frame and see if the outcomes are reasonable or not. I just finished the backtesting, and these results have surprised me. Our win rate is 70%, and the profits end up at 11%. I would also like to mention that these results will be different when trading live, so always try the strategy for yourself before using it. Guys, feel free to run back and forward testing on various markets and times to gauge how well it performs. If you want to see one of my other trading strategies I use when day trading, check this video right here, because this strategy works great on the every time frame you want. I'll see you guys next time.